I'm Janet Noak.
And I'm Andrea Dillon. We are a mother-daughter CPA firm serving the United States business community with tax preparation services, tax planning, tax resolution, assurance and audits, and CFO outsourcing and consulting.
Thank you for listening to the WOW podcast, Words of Wealth from CPAs of Florida. Learn more at 𝗘𝗦𝗧𝗔𝗟𝗟𝗓.com or call us at 239-936-6144. I am Janet Noak, and today I am sitting here with 𝗘𝗦𝗡𝗦𝗢𝗡. Carol works in our office and focuses on U.S. tax transactions involving non-U.S. residents. Our tax gotcha topic of this podcast is whether or not a non-U.S. person is required to file a U.S. tax return and what happens if they fail to do so. Carol, can you give us an overview of who would have a U.S. tax return filing requirement?
Sure. Let's look at their resident status. If you are not a U.S. citizen or hold a green card and you spend more than 31 days in a calendar year, you may be considered a resident for U.S. tax purposes. Keep in mind there's lots of different scenarios. Janet, can you discuss the filing requirement for a non-U.S. person who owns real estate?
Absolutely. We're going to talk about two different scenarios. The first scenario is a foreign or a non-U.S. person who has a rental property in the United States. So I guess we should start by defining rental property. If you rent your property 14 days or less in a year, it's actually not considered a rental property. So those people don't have an annual filing requirement. If you rent your property 14 days or more in a year, then you do have a filing requirement as a rental property. So that would be the first scenario. The second would be that you've never rented your property, you simply bought it as a vacation home, and you come to the U.S. to enjoy being here. If that's the case, you do not have an annual filing requirement. However, you do have a filing requirement in the year of sale. And that filing requirement exists even if you have a loss when you sell the property. So I guess my big question to you, Carol, would be, why would a foreigner care and why would they do these filings? Because they live in another country, and what could possibly go wrong?
Well, Janet, that's a bigger subject. Let's talk from a top level. The IRS has control over how much of your sales proceeds actually go into your pocket at closing because the FIRPTA rules will apply.
Carol, what is FIRPTA?
FIRPTA is the Foreign Investment in Real Estate Tax Act of 1980. So it's not new legislation. What is new is the enforcement. Almost every sales transaction will require 15% of the sales price, yes, the sales price, to be collected at closing. So if your sales price is $600,000, the FIRPTA withholding will be $90,000, and that will be collected at closing. So what you do prior to closing will determine if those funds can be returned to you or if they're sent off to the IRS. If they're sent to the IRS, the only way to get your money back is to file a U.S. tax return, and then you wait. One time I had a situation where a client let $180,000 get sent to the IRS. It took more than 2 years before her funds were refunded because she was a non-U.S. seller, all because she did not seek professional advice before closing.
Carol, I'm so glad you said almost. You and I worked together on a client, and we were able to eliminate the 15% FIRPTA withholding. There's a specific exclusion, and two criteria need to be met. The first criteria is that the sales price has to be under $300,000. Obviously, that's an easy one to know. It's either $300,000 or below, or it's not. The second one's a little more tricky. The buyer has to sign an affidavit that they're going to use the property for personal use 50% of the time or greater. Oftentimes, the buyer doesn't want to sign that affidavit, which causes all kinds of problems. So, let's move on to one further question. Carol, what happens if they fail to file tax returns and they have a rental property?
Well, if the tax returns haven't been filed, it will be discovered at closing. And then, in order to get your FIRPTA withholding refunded to you, you must be current with the IRS. Oftentimes, this will delay your closing.
Well, based on everything we've discussed today, I think you would agree that this is a complicated area of taxation in the United States.
Absolutely.
I'm Janet Noak. I'm sitting here with 𝗘𝗦𝗡𝗦𝗢𝗡, and you are listening to WOW, Words of Wealth, and we are at 𝗘𝗦𝗧𝗔𝗟𝗟𝗓.com and can be reached at 239-936-6144.